It is the silence that should terrify you, not the noise of the stock market ticker, not the shouting of politicians on the evening news, but the silence of an empty room that is supposed to be full. Because right now, we are standing at ground zero of the largest wealth transfer in modern history. And almost no one is watching the right data. You've seen the headlines. Gold shattering records, touching $4,384 an ounce. Silver ripping past $68, doubling in a single year. But if you think this is just inflation, or just interest rate cuts, you're missing what is actually happening. Because this crisis isn't starting in Washington. And it isn't starting on Wall Street. It's starting in the East. In November 2025, a single number leaked out of China that sent shockwaves through the bullion desks of London and New York. The Shanghai Futures Exchange and the Shanghai Gold Exchange reported that their combined silver inventories had collapsed to just 39 million ounces. 39 million. That is not a reserve. That is not a buffer. That is less than 3 weeks of global industrial demand. And for a country that manufactures roughly 80% of the world's solar panels, that number is not an inconvenience. It is a national security emergency. And yet, something even stranger was happening. Silver in Shanghai was trading at a premium to the west. Metal was leaving London, leaving New York, flowing east. This wasn't speculation. This was a physical run on the vaults. And the vault wasn't holding dollars. It was holding the one metal that makes the modern world function. This is not the silver squeeze Reddit promised you a decade ago. This is not retail. This is state-level panic, driven by Beijing, by solar physics, and by governments quietly preparing for shortages they cannot admit publicly. Just weeks ago, the United States quietly added silver to its critical minerals list. Why? Why would Washington suddenly classify silver the same way it classifies uranium and rare earths? Because the vaults are empty, the mines are tapped out, and the war for the last ounce of strategic silver has already begun. And in this investigation, we are going to expose the structural silver deficit Wall Street refuses to model. We will break down China's dual-use export controls activating January 1st, 2026. We'll show you the solar math that quietly doubles silver consumption overnight. And we'll answer the real question. Is China hoarding silver to undermine the dollar? Or are they hoarding it because they know the lights are about to go out? Buckle up. The era of cheap silver is over. Let's address the elephant in the room. Or more accurately, the dragon. For years, analysts have whispered that China underreports its gold reserves. That's no longer controversial. But what changed in 2024 and 2025 was silver. Look at the data. In late 2024, China's central bank went silent. Official gold purchases dropped to zero for 6 straight months. But at the same time, UK customs data showed massive precious metal exports flowing directly to China. This is what analysts call the shadow reserve strategy. Beijing doesn't buy through the central bank. It uses state-owned banks, refiners, and proxies to absorb physical metal without moving official reserve numbers. The goal is simple: suppress price signals while securing supply. But in late 2025, something broke. Buying became so aggressive it couldn't be hidden anymore. Premiums on the Shanghai Gold Exchange exploded. For the first time, silver in Shanghai was trading meaningfully higher than silver in London. That creates an arbitrage. Buy in London, ship to Shanghai, sell instantly. And that is exactly what happened. Western vaults drained to satisfy Eastern demand. But then something confusing appeared in the data. In October 2025, China exported 660 tons of silver back to London. If they're hoarding, why export? This is the key. China is not exporting strategic stockpiles. They are churning deliverable bars to keep Western price discovery alive, because a collapse of London pricing would spike prices too fast, even for China. At the same time, they are importing raw ore, silver powder, and silver paste. For domestic industry, they are managing price while locking down the physical chain, and this strategy points to a deadline, January 1st, 2026. That's when China's new dual-use export control list activates. You've already seen this movie. Gallium band, germanium band, both critical for chips. Now, solar manufacturers fear that high-grade silver paste is next. If that export shuts down, Western solar manufacturing stalls overnight. So yes, China is hoarding, but not just for money. They are hoarding the means of production. At this point, skeptics say, high prices cure high prices. If silver gets expensive, industry will substitute copper. That logic is outdated because solar technology changed. For 10 years, the world used PERC cells. They were efficient, cheap, and they used about 10 milligrams of silver per watt. But PERC is dead. The industry has shifted to N-type architectures, TOPCon, heterojunction, HJT. These cells are more efficient, last longer, perform better in heat, but they consume far more silver. TOPCon uses 13 milligrams per watt. HJT uses 22 milligrams. That's nearly double. And in 2025, TOPCon captured over 80% of global production. This is the photovoltaic singularity. Even if solar installations stopped growing, and which they are not, silver demand would still rise sharply because each panel now eats more metal. Substitution is not trivial. Copper oxidizes. It destroys efficiency, especially in HJT cells, which means demand is inelastic. Manufacturers pay whatever price is required to keep factories running. Now add the supply side. We have been in a structural silver deficit for 4 consecutive years. In 2025 alone, 117.6 million ounces. We are no longer balancing supply and demand. We are eating the pantry. And when inventories hit zero, as they nearly have in Shanghai, price discovery changes. It's no longer, what will speculators pay? It becomes, what will manufacturers pay to keep the lights on? And the answer is simple, any price. For 2 decades, the United States ignored silver. Refining went offshore, stockpiles vanished, dependence grew. But in 2025, Washington woke up. On November 7th, 2025, the USGS added silver to its critical minerals list for the first time. This changes everything. Silver is no longer just an investment metal. It is now a national security asset. This designation unlocks Defense Production Act. Title III funding. Billions of dollars, authorized under the One Big Beautiful Bill Act, are now flowing into domestic mining and refining. Congress followed. The Silver Shield Act monitors end use of defense materials. The State Strategic Stockpile Act encourages decentralized hoarding of medical supplies, many of which rely on silver's antimicrobial properties. The U.S. government is becoming a net buyer. China is hoarding. America is stockpiling. The solar industry is panicking. So who sells? The miners can't. 80% of silver is a byproduct. You don't mine silver. You mine lead, zinc, copper. If base metal demand falls, silver output falls, or even if silver is $100. Supply is rigid. Demand is exploding. Silver is $68 today. Analysts talk about $80 by early 2026, but history matters. Inflation-adjusted highs, gold to silver ratios, structural deficits. Triple digits are not fantasy, they are math. Shanghai vaults are signaling distress. Washington legislation is signaling panic. And solar physics is signaling inevitability. Physical availability is shrinking. Premiums are rising. Ignore the paper price. Watch the metal. This is not investment advice. This is a reality check. The world is running out of the one metal it cannot function without. If this analysis helped you understand what's coming, hit like. It pushes truth through the algorithm. Comment below, do you trust ETFs? Or are you watching physical supply? Share this with anyone who thinks the economy is normal. It's not. Stay safe, keep stacking. And I'll see you in part 2.